In the most basic way, here is how the process works at Sampson. As a new client, we will first engage in the financial planning process together before making investments on your behalf. Once we have completed this process, we will then leverage what we have learned about you into a long-term comprehensive wealth management relationship. Navigating your financial life can be tricky and tedious. Our solution is to encompass comprehensive planning, which includes a multitude of components that in turn attempt to alleviate stress, simplify life, and formulate a unique roadmap to financial freedom. In this process, we will examine your more generic attributes, such as levels of insurance and company benefits. But in addition, we will also explore the social side of your life, with topics ranging from your estate plan to how you envision your lifestyle in the future. Seeing what a finalized plan looks like is important. It is only natural that you would desire an understanding of what to expect if you went through the financial planning process with Sampson. This slide and the next sequence of slides are meant to allow you that opportunity. Here's what to expect. We will start with an initial meeting where we will get to know you, explain our value proposition to you, make sure that we are both a good fit for one another, and if so, we will start our financial planning relationship with you. We will then schedule a meeting 2 weeks from the initial meeting and give you a list of documents we need copies of before our second meeting, otherwise known as the Insight meeting. In this second meeting, we will ask you numerous questions that are aimed to both gather generic and social dynamic information. After this meeting, it is our job to then go back and prepare a finalized plan. Once we are ready to present to you, we will contact you and schedule the third and final meeting, the plan delivery meeting. The following slides will outline part of what a final plan looks like and what you can expect from its contents. Ideally, after the third meeting, we would like to leverage the information we have learned about you throughout the financial planning process and establish a wealth management relationship with you to invest your assets. First, we will go over your personalized net worth statement. This information gives you a good idea of exactly where you stand financially at this point in time. Next, we will review the vast amount of information gathered during the Insight meeting and review what is important to you both now and in the future. After reviewing some of the assumptions we have made, like what numbers we have used for average inflation and investment return, we will propose specific scenarios and their probability of success. We always start with the current scenario, and based on everything you have given us, we determine whether or not we think what you are currently doing is going to be able to support what you have outlined as goals for your life. The probability of success is calculated by a process called a Monte Carlo simulation. This exercise takes what we have assumed about inflation and investment return and sets it as the mean of a bell curve. The program then runs 10,000 different scenarios of varying inflation and investment possibilities, and calculates how many of those scenarios have money left over upon the end of the plan. We use age 92 for women and age 90 for men. Sorry guys, we statistically don't live as long as women. We feel comfortable suggesting a scenario to be successful if the probability of success is 90% or greater. If the current scenario is under 90%, then the next option always outlines what amount you would need to save in order to bring the probability of success up to 90%. If your probability of success is at or above 90% in the current scenario, we will outline varying other options that might be of interest to you. For the purpose of this example, we have used a current scenario that does not have a probability of success of 90%. As you can see, scenario 1 in the case of this client is showing both how much they would need to save in total and in addition to what they currently are saving. During the Insight meeting, we have a very in-depth discussion about what goals are most important to you and have you rank them from 1 to 10, with 10 being the most important. When we subsequently present other scenarios to you that require a lesser dollar amount to save, we will be conscious of what goals to cut back on or eliminate first. In turn, this is how we formulate the varying scenario options we present to you. This slide, which is representative of one page of our financial planning presentation packet, is one of the most important pages we present to you. This page boils everything down into one quantifiable and easy to understand list of options that we think will be successful. For the sake of simplicity, in this example we have only run 3 alternative options to the current scenario. Typically, we like to give you at least 5 different scenarios to choose from, which allows us to have a vibrant, open, and honest discussion about what is reasonable. This, in essence, becomes the backbone to our wealth management relationship with clients. We then will make recommendations for clients to implement regardless of which scenario they choose. Although clients are not obligated to implement anything we recommend, we do make these recommendations for a reason and strongly suggest they do what we outline for them as action items. If there is information that we think is specifically unique and important to you, we will take the time to outline it in a way that is simple and easy to understand. In this example, the client is an executive at a major corporation and has a benefit package that on the surface is confusing. We solved this problem for her by breaking down each section by type or reward or program and outlined in layman's terms how they work. In essence, we become clients' personalized HR consultants. For each scenario, we will do an analysis of the appropriate level of insurance protection to ensure what is outlined actually occurs, even if there is an unexpected bump in the road. Our stance on insurance is that for most people it is a protection and not an investment vehicle. Permanent insurance is, however, a great tool to leverage in the transfer of wealth from one generation to the next. So for estate planning purposes, when relevant, we will use one form or another of permanent insurance as a part of an overall strategy. Disability insurance is also important to discuss and to make sure you understand the difference between the two types, own occupation and any occupation. We will also go over the importance, when appropriate, of long-term care insurance coverage. The cost of medical care is increasing at an alarming pace, but we can potentially offer a solution to help you and your family navigate through challenging medical situations that can occur in life. Finally, I'd like to outline for you an example of a basic estate planning solution that we work with estate attorneys to offer to clients. It is important to note that this is only one of many ways to leverage a trust to pass money on to another generation, and each client scenario is unique in its own way. The main purpose of estate planning is to prevent your estate from being subject to probate court, to mitigate social family issues, and attempt to, as much as possible, reduce estate taxes upon your death. So let's look at an example. Here we see a husband and wife with 2 children and an estate of $10 million. To avoid taxes, we would develop with an estate attorney the following sequence of events. Let's say the husband dies first. As it stands in 2011, there is a $5 million federal estate tax exemption. Upon the first death, $5 million of the estate would be transferred into a B trust and put into the children's name. The wife can still receive investment income from this trust while she is alive, but upon her death, the remaining $5 million can be transferred to the B trust, resulting in the children receiving all $10 million of the estate free of estate tax liability.